Hi, this is Joe Rabil with Rabil Stock Research. So today's lesson is basically a prep for next year. I think what we're seeing right now looks like we want to finish the year on an up note, or at least not give back a whole lot. And then I want to talk about what I think could take place next year and the reasons why I'm thinking that way. All right, so let's go ahead and get going with this. Okay, so I've got the S&P chart up and I'm using a yearly bar chart. All right. Now, I have brought these up in the past, but I want to go into a little bit more detail in the way that I'm looking at this, and especially now based on where we are during the time of the year. All right. So we've got a yearly bar, meaning we're looking at an open, high, low, close candlestick that is based on the year. All right. For 2024, we opened up basically down here. We had a little bit of a check back, not much of a move to the downside, and have basically been moving up, straight up all year. A few setbacks, not a whole lot of pullback. And now with not that many trading days left in the year, if you go and look at your calendar, look at the holidays involved, there's just not that many days in here. And so I think the likelihood is, even if we have a little pullback, that we probably finish off the year somewhere near this area. I would say at least in the 6,000 zone, I guess, is where I would be expecting. All right. Now, it's possible to actually do better than that, but there's a few things that are glaring when I look at this yearly bar. All right. So first of all, we want to pay attention to the 4. This is the 4MA here. And we want to look at periods where we get stretched away in either direction, one way or another. All right. So if we start to get too far away one way, we sort of look for it to check back. If we come down too far, we expect it to sort of snap back towards this line. And you can see whenever we do that, we get these little pullbacks. And we had in 2021, we actually got too far away, and then we ended up having a bear market, right? And then it returned back to the line, found support in the area of the line, and then has turned back to the upside. But look at how far away we are now. Now, you think about it, we're so far into the year, typically when you open near the low and you're near the high this late in the calendar period, we sort of expect it to finish off on an up note and finish as a big green bar. And then we look for follow through into the new year. I think it's possible we'll go to another new high as we go into the new year. But if you notice, we're pretty far away from this 4. All right. So there's risk of some kind of a check back. Now, it might only be to the midpoint of this bar where it meets up to it, but there's some room in here for this to back and fill. Could spend the first 6 months backing and filling. It could pull a reversal pattern, but I'm not really looking for that necessarily. One thing that is bothering me a little bit is that we've gotten pretty stretched away, kind of like we saw in the late 90s. You see how far away we are from the 18-year moving average? Okay, doesn't happen all that often when we get that far away. The other thing that's bothering me, and that is glaring, is that this is the biggest bar on the chart. All right, so we make a big move and we get stretched away from the 18 and we create a monster green bar. All right. So when we get a monster green bar stretched away from the 18, we should be thinking there's some risk. Now, you know, am I really calling for this to come back to the 18-year moving average? Not really. No, I'm not. I'm not looking at that. I think the momentum is way too strong across multiple timeframes for the most part. But we could have some risk when you look at the weekly chart and the fact that it's not confirming. We have some risk for this to spend some time consolidating or pulling back. So I think we need to be aware of that. If we go and look at the way this played out in 99 into 2000, we were up, and then we opened up in 2000, made a push, and then came back down. This is the signal I'd be on the lookout for. So let's say this is this year's close. If we open and we make a push to new highs, we're looking for the point where we come back down through last year's high and last year's close, and preferably the close, get back down through that and turn negative for the year. All right. So if we make a small push to the upside and have a reversal, basically like an opening reversal type pattern, when we push up and come back down through the close of last year and the open of this year, then I think there's some risk in this market. All right. Now, actually, let me leave it on this, and I want to show you one other thing. So we can switch this to now. One of the things I wanted to point out that ACP I really like is just giving us the ability to look at these longer term timeframes like this. Not all software programs are going to offer this, but what I like to do is look at the 18 quarter line. You see how great a line this is for long term investors. So we do break it. We can consolidate and come down to the yearly line periodically, but the reality is that this line, when we come down to it, tends to be a really solid support zone. But when you get stretched away, it's also a sign of risk. So we want to be aware when we're getting too far away from this line, especially as we're flipping over into a new calendar year. All right. So we're finishing off the year, finish off this quarter. If we get a little follow through, we see red early, meaning we go to a new high, and then we see a move back through the open of the year, the new year, and the close of last year. I think the risk of this starting to correct, come back, maybe even working its way back a little bit closer to 5,000 or something like that, you definitely feel it in your stocks. You want to be aware of where the market is at this point. And the reason is that we've got a few things. Number one, the sentiment has gotten a little too bullish right now. And I don't view that as a timing tool. I view it as a condition. And all the stuff I'm talking about today are conditions. They're not timing tools. We're just saying we're stretched away on these long-term charts. We've got a momentum. We have momentum that is not confirming on the weekly ADX. All right. And this is not that different than what we saw late in 2021, where we pushed to new highs. And then what ended up happening here is the volatility dramatically increased. All right. And we got too high volatility, no momentum confirmation. Well, we're in the same boat right now. Now the volatility, because we've had some smaller bars here on the weekly, the volatility is starting to drop a little bit. But right now it's still too high. And if we have that and we don't have confirmation, we finish off the year that way, then again, I think there's some risk of some follow through and then corrective action. So you want to be aware, just be prepared. Always want to think 2 or 3 steps ahead like a chess player. Don't just come in not recognizing how we're situated. And I think you're going to be in a much better position come the new year. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. My comments are for educational purposes only. Please do your own due diligence before making any investments. All right, we're going to go through the QQQ, and then I'm going to look at the IWM. But so what I want to do, and the way I want to set this up, is I want to show you why the individual chart patterns are confirming the idea that we're going to push higher for now, drift higher, push higher. And I'm looking at some of the big Mag 7 stocks for that. And then I want to tell you where I would be focusing my energy for new buys, because the reality is that there are a lot of stocks that have not moved up for the last couple of years, and they're starting to emerge. They're starting to show new relative strength. So I want to go through some ideas on that in that regard. All right, let's look at this QQQ. So if you notice the way this is playing out, and what's a little disturbing to me is that, again, we've broken out here, and green DI still hasn't really, I guess it's starting to move up. But if you see how low the ADX is, the ADX might, so this could move higher into the end of the year, and then the ADX could actually get up towards 25. And if we get a reversal there, I think that would be a pretty big negative. So we want to be on the lookout for this. Again, we continually want to be thinking ahead. So right now, the way I'm looking at this is that we had a very, very strong momentum condition in place. And then after this correction, it has not been able to get back on track based on the ADX. All right. And so if we can't get this back above 25, we need to take very seriously any kind of reversals that take place on this weekly chart. All right. So something you want to be, I think, on the lookout for. Now, What I will say, because of the strength in some of the big names, we are starting to see this perk up, but it would have to take out this high to truly turn this back into an uptrend. Right now, it's in a, it's essentially, it's broken the trend line, right? And it's caught in between these two lines. So it's in transition right now on a relative basis, all right? And unless we come back down through this low, or we come back up through this high, I think you got to sort of consider this in this transitional phase right now. All right. So what I've been saying all along was, even though the relative strength had turned down, we hadn't seen any real weakness in the price pattern to any significant degree. And because of that, I think we have to go with price and then recognize that maybe this area isn't the leader right now. So we just got to be keep that in mind. And then when we start going through some of the Mag 7 stocks, I think it'll make more sense. I do want to continue to watch the Russell. The Russell has a much different pattern, big base, and it is emerging. And we're getting much closer now. It's starting to kind of whimper off here. We want to see this break out above this prior high and complete the 1, 2, 3 on a relative basis, right? We want a 1, 2, 3 reversal on a relative basis. We want this moving average rising. And then I think the small caps probably could start to kick in a little bit. But if you look at the individual stocks, there's a lot of stocks, I would say, 15 billion or less, that have some big base breakouts. All right. And some of those are leaders. And by the time this actually kicks in, a lot of those will have doubled by the time this actually kicks in, and it's a confirming uptrend and everybody's talking about it. All right. So I look at so many charts. I go through thousands and thousands of charts. I'm a bottom up guy. So based on that, I think my subscribers have a little bit of an edge, just because I'm seeing the stocks that are starting to break out. And those are the stocks I highlight on my Wednesday report. All right. So we need a little bit more strength here, but I do like the fact that this ADX is rising on both of these time frames. And again, we need that relative strength to kick in, but not too bad. All right. All right. Let's look at a few of these Mag 7 guys. Look at what this did. So, and I was talking about how this, and over the last few months, I've been talking about how this actually was a really orderly, held the 18-month line, formed a pinch, momentum is good, and then turned back up here, and then did a little zigzag inside ABC. So, ABC kind of like this, as opposed to an ABC lower high, lower low. And coming back up through here, I think was pretty important. The MACD did hold its zero line, and we showed no real strength in the sellers. So now we've made another higher low. We've broken out and sort of tested that high. Now, the relative strength has gotten back on board. I think we need to watch that pretty closely for now. We also want to watch for signs of distribution and see as we flip over into the new year if there's some issues that develop. Now, this is another one that was kind of interesting in the way it played out. Look at how the price pattern made a higher low while the MACD made a lower low. This is one of my patterns out of my course in my book called a reverse divergence. All right. And ADX stayed strong. Buyers remained in command. And now we're breaking out of this little consolidation. I'd probably watch for a little higher low to form a little dip and test of support on the daily chart as a potential entry. And I would view this as a trading play on the weekly and the daily, as opposed to playing it on a bigger picture pattern. Don't really see that. It's kind of gone too far. And if we look at what this has done over the last several years, I mean, it's not early. So you can play this for, the next 2 to 4 months or whatever, but I think I would use daily risk if I'm going to play it. MTA, so this one is interesting because the ADX really hasn't been all that great, but we got a pullback to the 18-week. We had our little ABC correction. We got back above here. It had a marginal overrun, but still, again, no real selling pressure. So we're starting up. It probably makes some kind of a higher low, tests the breakout, and then turns back to the upside for now. For now, I think it's good enough. Now, what we were talking about with the QQQ on the weekly, I think we want to watch this on the daily. So we need this ADX to confirm by getting back above 25. If it only goes up enough and gets to 25, and then we get a price turn, then we know this is probably making some kind of an interim peak. All right. So that's what I'd be watching for on the meta. Look at something like Microsoft. This is, I think, probably my favorite on the Mag 7 guys. So look at the way this is consolidated here and come right back down to the MACD. I call this a kiss and go. We just basically came down and kissed the zero line and is turning, right? No real sign of selling strength. And We have the potential, I think, with a low ADX condition, if this can break out here, let's look at this. So if we can break out above these highs, I think we'd want to respect that. And again, maybe this wants to make a push up towards 500 into the new year. And then I think we need, so if I'm going to play this, I'm playing this off the weekly and the daily. I'm using daily risk on a trade like this because I want to take targets quicker. I don't want to be in this for too long. I mean, this doesn't look bad, but again, it's not early. And I'm going to show you ones that I think are a lot earlier in their patterns, and I think have a lot more potential upside to them. And those are the ones I'd be playing for bigger picture plays. Look at NVIDIA. So NVIDIA is just lingering up here. It has shown some signs that it's dropped off, but not to the degree. You're not really seeing the kind of selling pressure that says this has got a big drop in it right now. All right. So, we did turn down on earnings. It could flop around in here. It might just flop around and not do a whole lot right now. But we got to keep an eye out for a sign of real selling. We don't really have that yet. We need red DI on the weekly chart to kind of pop. That means we need a big red bar on the downside now that it's gone to a new high and now that the ADX is not confirming. That's a lot different than having a big red bar here after a confirmation. Do you see what I mean? So we have no confirmation in this ADX. So now a big red bar coming down would be a lot more meaningful, especially if you broke the 18 week. So we want to watch that. But again, we could easily linger into the end of the year just based on what I'm seeing. All right, let me show you some patterns here. And I want to focus in on these long-term charts. Look at this big base that has formed and just recently broken out. All right. It was a low ADX condition for a long time. MACD is turning up. We had a low ADX condition here, and now that's starting to turn up. Now we need this to come down and test 25 and then kind of hold. And I think if we get that, that would be a really good setup. Now there's a lot of regional banks. If you go through and look at the regional banks, you'll see a lot of breakouts there. All right, so just be aware of that. This is just another example of that. But we need some confirmation on this one. I'd like to see this hold on a pullback. Now, here's a bigger bank, but look at the way this has set up. So we had this big turn. Do you see the difference? Like something like this versus something like Apple or Microsoft or something like that. This is early. So I'm not saying this is going to work. I don't know if it'll work. But if it does, the potential upside, I think, is pretty significant. We had a low ADX condition for 3 or 4 years, and now it's starting to kick in. It's a nice pattern that's reversing here. So definitely, I think, worth monitoring from that standpoint. Now, look at DraftKings. So what I like about this is that it made a move. It came down, made a move to the upside, and then it pulled back to the 18-month. Now, this is the first pullback to a rising 18-month line. All right. So this is a bigger picture play, I think. And now we're getting a 1, 2, 3 reversal that just clicked in on the weekly chart. All right. We broke the trend line, tested, and now we're coming back up. This is all out of my course. I go through that in detail, that reversal pattern and how to use that when you're using it in multiple time frames and how to be more aggressive, meaning our entry could have been more aggressive and not waited for the 3 because of the way this played out and bought that big green bar off of a pinch. All right. So, but this is a really attractive pattern, and I think it's a lot earlier. I would be willing to play this for a bigger picture play. Now, look at something like this HealthEquity. Look at the huge base this is breaking out of. A few weeks ago, I did a lesson on, these sideways lines forming big bases and looking for the start of a new trend, basically like game on, right? I mean, we've been waiting and waiting and waiting, and all of a sudden this is starting to kick in. Low ADX for years, and now we're getting momentum. Watch for any kind of weakness, and I think, look for some kind of a higher low on the weekly or something like that. And I think this could be a stock that could go up for a while based on the size of that base. NCNO is another one. Let me just see what the market cap on this. Market cap is less than 5 billion, right? So not a surprise. See the base breakout. Totally different than what the S&P looks like. This is not trading like an S&P stock. It's trading, based on, more like what's happening in the Russell. So got new emerging strength based on the ADX, new emerging strength based on the relative strength. And we've got a little base breakout. Again, probably could use some kind of a pullback here. All right, look at the base in this Sony. So this has been doing nothing, and it finally got through this 20 mark for the first time in a couple of years. Big base on the monthly chart. MACD is turning up. We've had a low ADX condition because no selling strength at all. And now we're finally breaking out of this. Definitely, I think, a stock to be on the lookout for. And then look at something like this Warby Barker. Look at the monster breakout with strength, right, after a long period. So here's a stage 4 decline. Here's a stage 1 base. And then we start to emerge with relative strength, some price action. And this, to me, is the start of a stage 2 uptrend. All right. And now, yeah, do we need a little bit of a pullback? See if we can check back to 20 or something like that. We've got new emerging strength. I like the volume pattern. All of that is, I think, really attractive. Thanks for watching today. If you have any stock requests, send them to stocktalk@stockcharts.com, or you can just put them in the comment area below. Also, if you have interest in learning more, you can go to my YouTube channel. It's called Invest Like a Pro. Have a great week, and we'll see you next time.